So we're coming up into our final lesson of the top-down analysis section. We've had that long-term perspective, intermediate-term perspective, and that short-term perspective with that bread and butter model. And now we're going to blend it all together and putting it all together. So let's put it all together, right? Long-term perspective, higher time frame, monthly, weekly, and daily charts. Intermediate term perspective, 4 hour, 1 hour, right? And then we want to do that short term perspective, 15 minutes down to the 1 minute, and we're going to see how we're going to do that. We've got this crude oil daily chart, right? So we're on our long term perspective right now. Now look at this chart, what has happened already, right? Think back about those core concepts. We have that external to internal range liquidity, right? So draw out your premium and discount levels, right? From this high up here into this low down here. We have discount until this equilibrium level, this 50% level of the range, and we're going to be aiming from external to internal, right? So where's that internal range liquidity? We've got that daily premium fair value gap, and this is our draw on liquidity. So we know on a long-term perspective, sell stops have been liquidated already, order pairing happened down here, and now we want to draw into internal range. So draw on liquidity has been determined and sell stop rate has happened already. So now we're going to dive into that intermediate term perspective, right? You want to have your long-term perspective in line with that intermediate term perspective, so you have a higher chance of being on the right side of the market, and eventually we go into short-term perspective to see how we can enter on a trade, right? So over here we've got that 1 hour chart for oil. We know from the daily time frame we already ran those sell stops right down here. Now we're breaking back up and up. We're looking for liquidity, right? We've got this high up here, we have this high up here, and then we have that internal range liquidity for our long-term perspective, right? That's the draw on liquidity. So when does the intermediate term perspective go in line with our long-term perspective, right? We want to have that one in bullish order flow as well, because we want to go into a premium array, and then for that we need a bullish order flow. So we wait for a break of structure on the 1 hour, right? So over here we've got this last swing low which has been liquidated up here, and then we have that break of structure. So we're going into a buy program from here on out. So intermediate term perspective is now in line with our long-term perspective. We can see down here we've got this discount 1 hour fair value gap, right? So we have our POI on the lower time frame, and we're going to be focusing on that 8 to 12 p.m. or 8 a.m. to 12 p.m. time window, right? That bread and butter setup. We only need to know, are we into a continuation pattern or are we in a reversal pattern? That's it. So diving in on a 5-minute time frame, what do we see over here? Take a look at this chart just for a bit and think about what we already learned in all those lessons, right? So our long-term perspective is in line with our intermediate term perspective, right? What are we going to look for next? Low resistance liquidity, right? Because we want to go into the market price where it's easy to go and not high resistance. So over here we've got this beautiful equal heights or failure swings, more failure swings over here, more failure swings over here. So once we hit that higher time frame POI, or from our intermediate term perspective, right, that 1 hour fair value gap, then we have some clear targets where we can trade into, right? So London session highs is our drawn liquidity for this chart. Draw out your New York midnight opening price as always, right? And we want to be a buyer below this opening price, and we want to be a seller above it. Important, now we're going to go into that short-term perspective, right? We're waiting for our high probability time window, which is that 8 a.m. to 12 p.m. window, our bread and butter window. So we're aiming for a reversal, right? Because we are waiting for a drawn liquidity higher. Price action had been bearish for the longest time on the daily, and now is reversing after taking out that external range liquidity, and we want to go into that internal range liquidity, which is that fair value gap on the daily time frame. Remembering back the 1 hour time frame, now we're in line, right? We have that break of structure on the 1 hour, so intermediate term perspective is in line with long term, and now we're looking at that short term perspective. Is the market giving us an ability to go up, right? We wait for that break of structure on the lower time frame too after that higher time frame target has been hit at POI. So failure swings, right, as outlined earlier, all the way above here. So a lot of buy stops resting above here. So we have clear targets for our window and we're waiting for a reversal, right? So actually from 9 to 10:30 is that sweet spot for that reversal, right? We got that 5-minute structure shift. So now we have everything in line, right? Long term, intermediate term, and then that short term perspective is in line right now too, because we're breaking structure upwards, right? So all the time frames are in line, and now this gives us the most high probability trade setup you can get. Draw out your discount arrays, right? Where do we want to enter, right? Where is it logical for price to retrace back into and then continue up? We've got this bullish order block formed over here, right? Fair value gap entered on. This is opportunity number 1, right? For an entry inside the time window, right? Still inside the time window, and draw this out in time. We still have a bullish order block formed over here, and price keeps continuing up. This is outside of our time window, but we still have not met these London session highs, so we can still draw into this London session highs. But I would keep my entry inside this time frame for consistency reasons, right? Because if you take entries outside of this time frame, right, your data may be skewed because you're taking entries outside a specific time window. So multiple entry possibilities. You could even pyramid in over here again until we reach that level. Draw out your mitigation blocks, right, from the sell side of the curve, as we learned in the core concepts, right? Those mitigation blocks over here, and are they in line with those fresh PD arrays being formed on the buy side of the curve? Yes, they are, right, because we had this bearish order block down here, which becomes a mitigation block once we go into the buy side of the curve. We've got a order block formed in line with that mitigation block. Over here, same situation, right? Mitigation block formed inside this fresh PD array, which is a fair value gap, and then keep doing this until you reach your target, which eventually is those London session highs, right? Failure swings have been liquidated and this trade is successful. Right, so over here we've got a US dollar, Canadian dollar weekly chart, right? As always, we start off with that long-term perspective, right? We go from long-term to intermediate term to short-term to frame our bias and setup. So with this long-term perspective, what did we do? We have this premium high into this discount low. Where is a premium level? We've got this fair value gap, right? So we're going from internal to external this time, right? So internal range liquidity to external range liquidity. Now, after we hit that internal range liquidity, where should your eye go, right? We've got that external range liquidity down here. And also notice, right, after we hit that fair value gap fully filled, right? Look at the expansion of that weekly candle, right? So after hitting a POI, it's highly likely to expand with more volatility. Now we want to go from internal to external range liquidity, right? And think about time frame alignment. So we're going to dive a little bit deeper into the lower time frame to see our structure form. So over here, we actually have a 4-hour structure, right? We've got a market maker sell model forming with our original consolidation down here with external range liquidity, those sell stops, right? We wait for a break of structure. So our intermediate term perspective is in line with our long-term perspective. We can see those buy stops ran up here, right? And then we form a high probability order block in the process, right? So order pairing up here for accumulation of short positions from smart money. We're breaking down structure, leaving that high probability for our order block behind. And you can go back to the core concepts about order blocks, and we use this same example right over here. So we've got a 4-hour mitigation block here. Why is this a mitigation block? Because this was a prior bullish order block, right? So we can use this old area of buying into our new area of selling, and that's where we can find another opportunity if we dive into the lower time frame. So now we're going to a 15-minute chart, right? And remember that old area of buying, right? That bullish order block to the left of our chart. We outlined that in time to the right, right? And over here we can see a new area of selling occur. Now, what do we wait for? We either ask ourselves, is this more likely to be a continuation or a reversal, right? So what do we wait for? We wait for our time window, right? That 8 a.m. to 12 p.m. time window, that bread and butter window. Draw out your New York midnight opening price as always. Never forget this. Always draw this out on your chart. We can see accumulation of short orders above marketplace over here. And then is there any significant buy stop or sell stop ran already? And is there a new target do we have? So asking yourself continuation or reversal, what is more likely to happen in that 8 to 12 p.m. or 8 a.m. to 12 p.m. time window is the only question you need to answer for yourself. So continuation or reversal. Why is it continuation? The weekly reached up into a premium internal range liquidity, right? That fair value gap, and we could see it draw lower later, and the market hasn't reached for that external range liquidity yet. So this is the why for a continuation. So do we have news? Yes, we have 8:30 a.m. high impact news, NFP. So if it's continuation, did London accumulate above opening price? Yes, it did, right? As we outlined earlier. And if it's continuation, what are the two options? We either have a stop hunt or we hit a premium array. So we just asked ourselves, are we doing a reversal or is it more likely to do a continuation pattern, right? So with that 8:30 high impact NFP news folder, right? Is there any significant buy stop ran over here? Not really, right? So we wait for that news folder to be released. We can see this high over here has been liquidated. 15-minute time frame stop hunt. So we have two options, right? Always look for either a stop hunt or a premium or discount array to be hit. And now we have this stop hunt and trading down back lower. And in this occasion, all up close candles should support price lower, right? So we have these up close candles up here. And you can actually see our opportunity lies after that news release, right? After that stop hunt inside this bearish order block, and we break down structure here. See, so this 15-minute time frame breaks lower, this candle breaks lower, and the next candle dips back into that bearish order block. So going into the 5-minute time frame, short-term perspective, right? Now we know long-term perspective. We go from internal range liquidity to external range liquidity on that weekly time frame. On the 4-hour, we have that high probability order block, right? Pushing price lower, and then that old area of buying, which we are in right now, which is our new selling area. So that 15-minute order block is over here, which we outlined in the previous slide, right? So that should support price lower, and then we had the break in structure, and this next 15-minute candle we can see here on the 5-minute time frame comes back into that order block and starts to distribute lower, and then this order block is supporting price lower and it just drops through it too. Now we have a breakaway gap. So why do we have a breakaway gap? Think about that new PD array, right? That redelivered rebalanced PD array. So we have a BPR down here, right? Again, because down, up, and then the next candle goes down. So we have a balanced price range up here. So this fair value gap should never get tagged anymore until we reach that external range liquidity, right? Outline all your bullish up close candles, those bearish order blocks, right? We have a bearish order block here. Price moves down, forming another bearish order block. You can see beautiful, these wicks tap into that order block and drop down further. We have another up close candle, and price is being used here as a resistance once again. Back to that 4-hour, right? We had that beautiful market maker sell model, and there are multiple opportunities to get in, right? We have those mitigation blocks where you can get in. You can get in on that high probability order block, right, over here. And then as long as your long-term perspective and your intermediate term perspective and your short-term perspective is in line with each other, it tends to have a very, very high probability for a successful trade setup. And also important, right, time, that 8 a.m. to 12 p.m. window, very important.